Good afternoon, everyone. This is part of GABV's Banking on Values Day 2024, and the focus is on transforming banking, transforming lives. There will be a series of discussions in the different regions that represent our members. This is also the 15th anniversary of the GABV, and that is incredibly germane to me. Um, I became involved with the GABV in 2012 with my last bank, First Green Bank, and at the time didn't have a clue what values-based banking was. So um, it was a tremendous learning journey for me and my team. We unfortunately or fortunately, we sold the bank in 2018, and that allowed us to start our new bank, Climate First Bank, and we have rejoined the GABV, and I'm just super happy to be here. It has been an absolutely transformational part of my life, like I said. I would like to introduce our speakers, our panelists, if you will. The first is Andrea Harris from Van City, and Van City is another very instrumental institution in my life. That's where the first GABV meeting was held that I attended in 2012. And then became good friends with Tamara Vrooman, and just was amazed and blown away by what they do there at Van City. Um, and Andrea has been with them since 2003 and is the VP of Impact Strategy, where she leads a team of professionals developing strategies and programs focused on reducing carbon emissions, achieving net zero by 2040, and indigenous banking and reconciliation. Um, Andrea is also a co-founder of Fairware, a purpose-driven promotional products company, and instructor with BCIT. Of course, my phone starts ringing right when I least want it to be ringing. Um, so thank you, Andrew, for joining us. The next panelist is Tara Nielsen. Tara is with Beneficial State Bank, which also is extremely important to me in my journey. Um, I met Kat Taylor many years ago, and um, they started their bank with the purchase of another bank the same time I started my last bank. So we kind of did that journey together. Um, Tara most recently came from US Bank, where she launched the bank's impact measurement and management team, and she is the Chief Impact Officer at Beneficial. The next panelist is Jane Kern from Bank Australia, yet another institution which is dear to my heart. They hosted the GABV conference a number of years ago. I went, my luggage was lost, and I had no clothes. So is that a joke or something? The emperor has no clothes. And then somebody, I can't remember who the gal's name at the bank, went shopping for me and brought back a bag of stuff to the hotel, which included underwear, socks, shirts, and pants. And they all fit and they all look good. And I still have a pair of those underwear today. And they're an Australian brand. So it's like, oh, these are the coolest special things ever. So a decade later, I'm still wearing the Australian underwear. Jane is the head of impact management at Bank Australia, and she is responsible for managing and measuring Bank Australia's impacts on the people and the planet. And I know how difficult that is, um, generating data or collecting data to really tell what we're doing is very, very difficult. Um, the next panelist is Brian Argret from City First Bank, who also hosted one of our conferences, and I got to see the amazing stuff Brian's doing. Brian is also a recovering attorney like myself, and he is the CEO and co-founder, and or the CEO and chairman. That's right. I got that right, didn't I, Brian? Um, of City First Bank, and they are bi-coastal now, Los Angeles and DC. and do a lot of incredible work in low to moderate income neighborhoods. And then myself, I'm Ken LaRoe, the founder, CEO, and chairman of Climate First Bank. We opened June of 21. We're now 850 million in assets, which makes us the fastest growing new bank in America since 2009. We're super proud of that, and we're super proud of the impact we've had in the renewable energy space. Um, with that, I would like to ask the first question of each panelist, and I'm looking at my screen, and Andrew's to my left. So I'll start with you. How has your organization been transforming banking and lives in the communities you serve?
Thanks, Ken. And yeah, great to be here today on as part of Banking on Values Day. And nice that you have fond memories of Vancouver, Ken. So Van City is a credit union, and we were founded in 1946 by people who were underserved by traditional banks that wouldn't lend in their community. So basically, 14 people getting together around a kitchen table, taking action, pooling their resources, and starting to lend to each other to get access to the things they needed to make their lives better. And I share that story because that's really rooted in transforming banking in the get-go and making the lives of our member owners better is at the heart of why we exist. And that's really carried out to present day, I'd say, where we continue to work to provide access to financial services to those who face barriers. We continue to use the tools of finance to tackle the big issues facing our members, like affordable housing, equity, Indigenous reconciliation, and of course, climate change. Um, and our model is one where we're really trying to impact solutions across our core business. So thinking about how and who we lend to, thinking about our products and our services, our procurement practices, and how we operate our business every day. So some examples are that we're a living wage employer. We continue to offer products and services to people who are underserved. And we intentionally direct our lending towards projects that create positive impact in community. And we've done that with the help of the GABV to think through what is triple bottom line lending, what does that look like, how do we categorize that, how do we think about that. So the GABVs had a really important role in that. Um, and we've also made a commitment to be net zero by 2040 across our mortgages and loans. Um, Another thing I just want to highlight, Ken, because not everybody might be familiar with credit unions, but credit unions are owned by the members, by the clients that use the bank. And that allows us to reinvest our profits back into our members, back into the business every year. And so we are able to put 30% of our profits back in service of our members and communities every year. And that model has really allowed us to grow. Now we serve over 500,000 members across our operating region in southern BC, in Canada. And then through our national bank, Van City Community Investment Bank, we can serve commercial members across the nation. And that bank is focused exclusively on impact. So that's Van City and our impact in a nutshell. Thanks, Ken.
Well, that's really cool. A quick question I had. What is the living wage in Canada? Is it a country, or is it by
It's by municipal regions. It changes a lot. So
okay.
we have a BC one, and then they've also worked to try and develop one more for Metro Vancouver and those different areas because the cost of living can be so different, especially when you're living. And I know we'll talk about this in a minute, but within a affordable housing crisis. So
Yeah, for sure, for sure. And then another comment on the credit unions. I love the concept of credit unions and what they do. And I get frequently maligned for saying that as a banker, but it's an important consideration in the US. Credit unions don't pay taxes, but in Canada they do. So it's anybody complaining about Canadian credit unions don't have a leg to stand on, if you will. Um, I'd like to go to Tara, to you, and the same question: how has your organization been transforming banking and lives in the communities you serve?
Yeah, it's not a small question, but a great intro one. So, Beneficial State Bank is a triple bottom line bank. We were created by, as you mentioned, Kat Taylor and Tom Steyer to really create a model for banking that could prove this concept of banking being regenerative and good and investing in communities and the planet, while staying financially stable and sustainable. So we're mission driven at our core. We're a community bank. And so we have actually built in a structure where all of our economic rights are owned by a nonprofit foundation. So we are a traditional community bank, but similar to our credit union friends, we really have mission baked into the infrastructure of what we do and who we are. And we are still part of our traditional banking system. So we still contribute to CRA. We're a CDFI. We're a B Corp. We're just certified. We're unionized. So we have all the certifications and folks looking out to make sure that we're continuing to progress and evolve towards mission every single year. On the business side, we provide lending to a variety of folks, including nonprofits and B Corps. We provide small business lending, consumer lending, and environmental lending. I know a lot of us have talked about this on the call. We do affordable housing. And so some of the way that we provide, I think our greatest impact is by providing banking service that enables our nonprofit and mission-driven clients and customers to really be able to do what they do best. So that's one of the joys, is being able to meet and spend time with them. And then we also, I think, for similar to a lot of folks on this call, offer a platform for folks that want to steward their dollars, store their dollars, checking deposits in a safe place, and feel confident that those dollars aren't going to be used to go to private prisons or fossil fuels or other places. We can provide those services as well too. So it really is, on the deposit side and lending side, kind of a mutual benefit, which is pretty special. We serve 3 states in the US, so California, Oregon, and Washington. We have both physical branches and ATMs, and we also have kind of an evolving digital banking platform. So, we serve a variety of folks across the country as well. And my role is relatively new to the bank. It was previously held at our foundation, Beneficial State Foundation. So they really house this incredible impact team, and they keep their eyes on the horizon. But my role and the evolving kind of impact strategy for the bank as we grow is somewhat new in-house. So I'm really excited to be building the next chapter with this team and crew of people, and feel very, very honored and fortunate, and a little bit like a fangirl being on this panel with you all. So thank you for allowing me to be here. This is really wonderful.
Well, it's just really awesome, Tara. And one thing that I've found fulfilling and interesting myself is the different structure of the institutions, and then how that does lead to their mission fulfillment. And I feel somewhat like a traditionalist in that we're, you know, a regular old American started up, get some shareholders, and hope that you can take it into perpetuity thing. Um, but the interesting thing that you said was, it gives assurance to your customers that they are comfortable where their deposits are going. And our dear friend Vince Siciliano, who was the CEO of New Resource Bank, I think coined the phrase "know where your money sleeps at night." And that's just, it's super, super important. And we have the dilemma in Florida that our legislature passed what is known as the anti-ESG bill, House Bill 3, and we are forbidden by law to, quote, discriminate against any person or company based on ideology, industry, blah, 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 blah. So we had to do away with all of our um, references to ESG and our exclusionary list, because you just rattled off a bunch of the stuff that was on our exclusionary list. Um, Thank you for all you do over there. Um, Jane, could we have you answer that question? How has your organization been transforming banking and lives in your communities?
Thanks, Ken. So Bank Australia, we're based in Australia and we are a bank, but we come from the credit union movement as well. So similar to what Andrea has shared, we were started by people that were wanting to improve their access to finance, essentially. So Bank Australia is over 60 years old, and over the years we've had lots of different credit unions come together to merge together over 70. So we've got a big, old, complicated family tree. And we really started our modern sustainability journey around 20 years ago after a series of quite large mergers where we'd had all of these different institutions that, were based in different regions or based on different professions come together. And so there was a bit of soul searching, I think, for the organization in terms of thinking about, well, why do we continue to exist if we don't have, exactly the same things that we used to have in common? And what part of the work done at that stage is, well, what does really unite these people? And what we really hit on is that that we tended to have a really socially aware customer base that were interested in how a customer-owned institution could be progressing social and environmental issues. And we really kicked off back then with some early products in terms of things like what was back then like a carbon offset car loan and a green lending product. We also purchased a conservation reserve property. So we've expanded this over the years, and it's now around 2,000 hectares of land that the bank, holds the title to and manages in conjunction with environmental organisations and the local traditional owners. And so, these sort of early projects that we started really started to attract more customers to our bank that cared about, where their money slept at night, as you say, and what could be done with that. And so over that time, we've really built that base of customers that care about those things. And because our customers own the bank, they have a really influential in our strategy as well. So we check in with them regularly about which social and environmental issues are important to them and how they would like the bank to act. Based on that, we've landed on sort of 4 priority impact areas for the bank, and they sound pretty similar to many of my colleagues here. So affordable and accessible housing, nature and biodiversity, First Nations recognition and respect, and climate action is the biggest area for us in terms of customer priority and where we place a lot of our action, both in terms of trying to look for what we fund and how we can transform our lending portfolio. We lend to a lot of residential mortgages, for example, and looking at how we can green those, as well as then, looking at things like our own operations, like Terra, we're a B Corp, and so that, that's really influential, I suppose, in how we shape our work as well.
That's awesome. And I have a story about Damien also. He was at that table in the breakout session in the first GABV meeting I went to, and it was a round table, and there were CEOs from these banks around the world, and they're going around the table describing what they're doing, and they get to me, and it's like, oh my goodness, I'm not worthy, and I just slide under the table here. So that was another big giant influence on me, and Damien's just been there all along. Brian, could we go to you? And then after we get through, I'm going to circle back on a kind of a deviation on the question as it specifically relates to your institutions.
Sure. So I assume the same question, but first, just what
Yes,
a
I'm sorry.
wonderful, oh, no, that's fine. What a wonderful opportunity for me to represent our institution, City First Bank, with these wonderful colleagues, all of which we have either partnered or followed or tried to emulate. So thank you all for everything you do. City First Bank, I think what I'd say most importantly is that we really were created and stay true to solving a problem that exists here in our country. And that problem really is the gap in both access, opportunity, translating into wealth, to health, et cetera, that exist in our country. So just a little bit of history on that, going all the way back a year later, I think, Jade, to 1947 in Los Angeles. 3 African-American entrepreneurs, business folks, came together and recognized that African-American veterans who had fought in World War II to enhance our democratic rights here came back into the city, and they were unable to get mortgages to house their families. And that's obviously unacceptable, but in a gap-filling manner, they stepped in to create a bank that could directly serve and provide intention and access to capital. And then almost 50 years later in Washington, D.C., in a church basement, you had another group of individuals from all sorts who were looking at the residual effects from the unrest that had broken out in Washington, D.C. and cities all across our country after the assassination of Martin Luther King. Yet this was 1998, many years later, and looking at the disinvestment that had occurred in very clear and distinct lines across our city. And they said, that won't stand. We have to do something about it. And so again, they came together to form a financial institution because that was the vehicle that they thought could provide the most power to solve this issue. And so they did so, and they put that bank, City First Bank, on the map to solve that problem. So I mention this in that the intention started, then the bank came. There was always a problem, then an intention, then a solution. And in our case, that solution happened to be a commercial bank, like many of my colleagues here on the line. Now, we had the idea that, as I think we all know, we're part of GABV and we're part of these partnerships because we know the problems we are addressing, be it climate change or social or economic justice, are well bigger than any of our one institution. So we actually combined the two institutions about 3 years ago to increase our scale for the purpose of increasing our impact on the ground. And so we became City First Bank with our operations both in Washington, D.C. and the DMV, and also out here in California, where I happen to be sitting today. So that has translated in a dramatic increase in the main tool we have to change the world, and that's the provision of capital. So the model and the lane that we've chosen is really looking at commercial finance, and there's a reason behind that as well. It's very important on the consumer side, but we have a leverage effect in commercial finance, and I look forward to talking about that. We focus on 3 key areas. As we've been talking about, affordable housing is our largest and one of the most important. We focus on, again, we're financing change agents. So then we focus on nonprofits, particularly those that are expanding their capabilities in facilities financing. And then we focus on small business owners, and particularly minority small business owners. So again, creating wealth within the community, creating jobs within the community, creating economic and political power within the community. So again, it's the leverage effect of all of those players. We don't do anything on the ground. We're reliant on the folks we finance, and they're very, very powerful.
Very, very, very powerful. Thank you, Brian.
Sure.
A quick question. I know you're a CDFI, but aren't you guys an MDI also?
Yes, we're, a lot of us do a lot of things to codify who we are and to make sure it doesn't change. So we are a CDFI, Community Development Financial Institution. We're at MDI, which is a minority depository institution. We're a benefit corporation as well as a couple of my colleagues here. So a B Corp. And then very importantly, we're a member of the Global Alliance of Banking on Values, and all of these things ensure that the legacy of our purpose continues to go forward. And one more thing, we were talking about co-ops and ownership structures. In our Washington, our single largest shareholder is a nonprofit, and our partner, City First Enterprises, which itself is out lending, and particularly heavily in the environmental and social space. But this is our ownership structure. Right. So again, like many of the colleagues around the table here, we figured out how to codify it, how to make it long lasting, protected so we don't get mission drift. And we're always keeping our intention strong.
Brian, so you're a California bank, the original founders. Was the MDI designation available then, or is that more recent?
So it's more recent, but what's important was in the merger, one of the most important things for us was maintaining that minority depository institution status. So our collective boards and me and our management teams wanted that to transfer to the merged entity, just like both were CDFIs. One was a benefit corporation, the other was not. And so it was important as we came together to really maintain that status, because I think it it says something about who you are and who you're addressing, and in a way shows leadership in a segment, that we're standing for something and we don't mind saying it, and we'll blast it from the speakers, if you will, and go forward with it. So yes, we're a minority depository institution.
That's very cool. Just a real quick background on Climate First Bank. I almost said First Green Bank. It's like I call my daughter's name and get them all screwed up. But how have we been transforming banking and lives? Our big thing is renewable energy, especially solar finance, and we ended up having to write all the proprietary code for the middleware and software to develop those products for a fully digitized online consumer solar product. Since we rolled it out in May of 2022, we've done about 150 million in those loans, and it's almost 3,000 individual homes. So we feel really good about it. It's really good that we can measure that also easily. We know exactly how many kilowatts of power we put on roofs. We're also a public benefits corporation. We're a certified B Corp. We're a member of 1% for the Planet. I think we're the only bank that's they call it a B1 company, and of course the GABV. And we're super proud of all that. We're the only bank in Florida that is a legal benefits corporation, and the only bank that's a B Corp and 1% of the Planet. Let's go to some more slightly focused questions. For starting with Van City, what specifically, and this is an area, Andrea, that we really wrestle with. It's the affordable housing, social equity. I think we've got the environmental piece down, and we're pretty good at it with subject matter experts and products and all that. But what does Van City do to facilitate access to decent housing? Because I've been out there, I've seen with the prices, it's amazingly high. It makes St. Petersburg, Florida look like a second grade class. But what are y'all doing?
Yeah, it's a big issue, Ken, for sure. And so, with all these big issues, you need lots of different types of solutions and testing and learning and innovating as you go. So, haven't figured out any big silver bullets, but really trying, a bunch of different financial levers to create more affordable housing. And so we do commercial lending and retail lending, and so we're trying different things in both spaces. And I'll just start more on the commercial side, which we finance affordable housing projects, and through our bank in particular, we've built out some specialized expertise and focus on that. And the bank is really supporting and financing projects across the country, and looking for solutions like supporting land trusts to acquire affordable housing projects, really trying to innovate and provide different types of solutions. On the deposit side, we've also leveraged our deposits in support of affordable housing, and we've created a couple of different deposit pools so that enable two big affordable housing associations in our area, the Cooperative Housing Association and the Nonprofit Housing Association. They're sort of these backbone agencies that provide supports to co-op housing complexes and nonprofit housing providers. And they aggregate the deposits of their members. We provide a preferential rate, and a cut of that goes to support these associations to do the important work that they do in a sustainable, ongoing kind of way that is a lot more secure for them than relying on grants. So that's
Cool.
another example. On the retail side, we've tried some innovative retail products like our mixer mortgage, and the mixer mortgage allows non-related parties to co-own a property together, where each co-owner can negotiate a mortgage that's suitable to their needs. So terms that are good for them, but in a joint ownership kind of way, which is kind of interesting. And then through our foundation, the Van City Community Foundation, we've also leveraged our charitable giving. So using grants and supportive loan funds to enable largely community-owned affordable housing projects to get off the ground. So when we say community-owned, we mean things like churches who might be looking to leverage their land base. You know, the congregation might be shrinking. They're sitting on the land. They're thinking about what they can do to make that a community asset. And we support them in thinking about how they could redevelop it as affordable housing. Everything from education to capacity building for their boards to low interest pre-construction lending, which is a space that not a lot of governments or other types of supports are available. And then finally, we're starting to think more also about the intersection between affordable housing and climate ready housing. So we've, the credit union started a granting program where we support affordable housing providers, whether they're co-ops or indigenous housing providers, to take on retrofits so that they can create more comfortable, safer, affordable homes for their clients as well. So those are some of the different tools that we're trying to use to address that crisis.
Cool. That is definitely something that we want to get better at, and we're working on a product now that will allow a builder who is desirous, which I don't think there's any in Florida, maybe there are in California, of doing a development project, usually, you know, larger scale, multiple homes, where they want to reduce the carbon footprint of the entire development. And we're working on a product that would use carbon credits to help offset for the embodied energy that goes into a home, not just what the home uses, but the embodied energy. So Tara, at Beneficial, what kind of work are you, and this makes me think of it from being there at your building in Oakland, and I know the desire way back was to help with the revitalization of Oakland downtown and all that stuff. But how has Beneficial been working to foster inclusion, and can you give some examples?
Yeah, I can share two examples, and I'll preface this and say this is an area of personal and professional passion around financial inclusion and equity. And just to, you know, give the backdrop for those who might not be in this conversation day in and day out, like many of us are, our financial industry, as I think many of our panelists know, has been built on a legacy of bias and racism and inequity. And that has led to so much of the racial wealth gap and the divide that we see today, and the inequities, not just in wealth and financial health, but in so many other correlated factors as well, too. And so we have a lot of work to do to unwind generations of work that has been built to work the way it does today. And so, you know, I think at Beneficial State Bank, we are chiseling away at that system and infrastructure, and we need lots of folks to be chiseling away at that, because we have a lot of work to do and to catch up on to really get to the place of equity and equitable outcomes. So two places that we're doing that right now that get me excited about where we can go is one, our consumer lending program that provides lending to folks that have ITIN numbers. So that's an international tax ID number. So for folks that are immigrants, refugees to the United States that might not have a social security number, that tends to lock them out of any kind of checking, lending, financial products writ large. So for folks that might be looking for a job in an area that doesn't have good public transit, for example, a vehicle is essential to be able to get from point A to point B, to have that income. And if you can't get a vehicle loan, your options for any kind of income just become really insurmountable. And so by providing auto lending in our portfolio to folks that have ITINs as well as social security numbers, the same credit profiles, we are opening this door to folks who have been left out of traditional financial products without taking on any additional risk for our bank, but have really been able to kind of open the doors and prove out this model that, we have these standards in our credit boxes and our credit profiles that we don't really need to hold on to anymore. And so how do we kind of take apart those pieces that actually aren't serving our customers and our communities? So that is one that I get very excited about, and trying to find ways that we can expand it and evangelize it in other places, because I think it's really important. The other piece that I am really excited about, and I feel like it's just starting to emerge, is our participation in underwriting for racial justice. And this is a cohort of banks, and we are part of that cohort, and it is led by our foundation. So Andrea mentioned, the charitable giving that her foundation does. Ours really, Beneficial State Foundation, who own our economic rights, they really focus on field building, particularly around racial equity in finance. And so this is one of their really incredible marquee programs. And really the concept there is, again, we know that our underwriting standards across our industry have been built on a variety of assumptions and risk profiles that we are realizing we might need to test and reevaluate. And so we are partnering with Stratify, which is an incredible AI company, to really test our underwriting criteria. And so every bank in this cohort is offering their data, offering it up to say, evaluate it and see where we could actually adjust our standards, our underwriting criteria, to be more inclusive, to say yes to more people without adjusting our risk profile on the back end. And so we have just started to do that evaluation and testing. We have some cohort members that have had really great success already in being able to say yes to more folks and lend to more folks because of this program. But our intention and our hope with this effort is to really be able to get these insights and learnings and then adjust what we're doing and say, okay, what next? Like, how do we continue to unwind these things that, again, aren't serving our system the way that we intend it to? So those are two of the places that I get very, very thrilled. And as I mentioned, I think one of the other ways that we have such an incredible impact is like partnering with incredible folks like those on the panel, figuring out just how we undo things that aren't working for us and how we build things new, whether it's environmental lending or climate products, just figuring out how we move forward together and create a system that works better for all of us. So yeah, very honored to be here and excited for that question.
Cool. Hey, Brian, are you a member of the cohort?
Had to come off of my mute there. Yes, we were early member, I believe. I believe we're still providing data. We are absolutely there in spirit, and I believe actually one of our prior chief credit officer was a big lead in putting that together. So a little bit of history there. But they do great work, and we're happy to anytime be able to partner with Beneficial.
Tara, we'd be glad to join in that too, if you want to reach out.
Yeah, I will send around the sign-up sheet. I love it.
Yep. Well, very, very cool. So let me see, I got to figure out where I've left off here. So Jane, Bank Australia. So how are you guys empowering your customers to use your money, their money, for the people on the planet?
Getting myself off mute too. Yeah,
it's hard to do. I don't know what the deal is. It's like, where the heck is that thing?
Yeah, so I guess we are working to, align our lending with the things that our customers, expect us to do with their money, I suppose. So as a member of the GABV, we're really strongly focused on trying to use the deposits of our customers in ways that avoid harm. And wherever possible, then supporting positive impacts in those priority impact areas. And that means looking at the types of things we're funding and looking at opportunities to fund new things, as well as to, try to transform things that we're already funding. So I mentioned before, we fund a lot of housing, and we've got really strong climate targets. So Bank Australia is aiming to get to net zero, including our lending portfolio by 2035. And so that means really trying to look at, well, where we're funding housing at the moment, how can we be supporting customers to essentially, get gas out of their homes and transition to running their homes on renewable energy, be that from the grid or a combination of the grid and solar on the roof and battery in the home. So back in 2020, we launched a green mortgage product, and we did that in conjunction with Australia's great, federal government green bank, the Clean Energy Finance Corporation. And so, yeah, we launched our green mortgage product, which we call our clean energy home loan. And that rewards customers with a reduced interest rate, essentially, if they buy or build a new green home or make ambitious green upgrades to their existing homes. And that upgrades to the existing homes thing is really important because, around half of the homes that we'll have in 2050 have been built already. And so where we can, sort of working with customers just to improve what they've got and look at those upgrades. It's not an easy thing to do, but we realize it's a really important thing to do in the market. And that's where, as a smaller bank that's got that, really strong sustainability focus, we've been able to sort of roll up the sleeves and try to really do that tricky bit. Earlier this year, we also launched an Electrify Your Home pilot. So, to date, our green mortgage product had kind of, sets out criteria and lets customers go away and tell us when they've fulfilled it to be eligible for that product. But what we've recognised is that there's a need for more support for customers. It's a tricky thing to know which suppliers you should use, which upgrades are good, etc. And so that Electrify Your Home pilot was trialling a digital energy assessment tool, essentially, for customers that can, fairly simply, give a pretty good calculation of what different upgrades would mean in terms of cost savings, emissions savings, and then if they choose, connect them with suppliers that can help them do that. So I guess we're in there sort of testing out, different options to help try to solve that big piece of the puzzle. We also do fund a reasonable amount of community housing providers and specialist disability accommodation. So one of the next things sort of coming on our list is thinking about what we could be doing in that sector. So that's one thing I love about the GABV. I'm going away from this call thinking, I need to connect with Andrea and ask how they're doing that. So
Exactly. Exactly. We have about 8 minutes before we need to open up to questions. So I have one quick question though. I heard 2035 net zero. I heard 2040 net zero. Andrea, when are y'all want to be net zero?
2040.
And then Tara, have y'all set a goal?
We have not, but we are working on it. We are working on that goal.
That's where we are. We don't have a goal, but we know we need to, but it's back to that measurement, protocol. And then Jane, y'all are 2035, and then Brian, do y'all have a goal?
We're about where you are, needing to set one and focused on how do we get there in a way that's
maybe the three of us,
transparent.
the three American banks, we can try to figure it out.
Let's do it. Yeah.
That should be a topic at our next North American chapter meeting. Yeah. How do we get to net zero? I got to write that down. Hold on. So I'd like to real kind of quickly do a round robin on what challenges do you see with your institution? And it's cool that we have two institutions that aren't in America in the next 15 years. And it's very germane.
Do you mind if I give an example just for City First real quick before you jump to that last forward question? So one thing that we're in two high cost housing markets in the DMV and in Los Angeles, and we talked about affordable housing, but I wanted to shift, and I love all the innovation around product, but back to the impact of our customers and just share one quick thing about how they're really the change agents. So we've had the blessing of working with Omar Kareem and Banneker Ventures. Over last year, they opened an affordable housing development of 81 multifamily units, all rental, but all of which were available to residents at 50% or less of the area median income. That is a really hard thing to do. And not only did they do that and provide it in that manner, again, we're fortunate to be able to help them from a financial standpoint, first with the land acquisition loan, and then subsequently with the construction and development loan to do that. But they built a unbelievable project that any of us would want to live in, with great services, retail on the bottom and the like. And deliver. It was a $47 million project, just for context and scale, but it was also in the center, in a central neighborhood, African-American community called Anacostia, that has not seen the same kind of development. So it's a game changer for the community as well. But one other thing, here's where, again, we were financing it. It's in our theory of financing business owners who also have further impact. So it's that development. But we also, with this African-American entrepreneur now, we've helped him to create more sustainable change within his employee base, his executive team, and folks, his vendors, et cetera. And here's what he did. He set up a foundation. He set up the Banneker Foundation, and I have to read this, and they've put out over $600,000 in over 30 other nonprofits focusing on emergency housing, scholarship. So this is that compounding effect that goes way beyond any transaction or any deal, that really goes to how do you transform a community. And I'm so proud that we have the opportunity to stand alongside Omar and his unbelievable team. But that's why it's so important for us to have mission-aligned partners, right? Because they do the work, they make the change. What we do is make sure they get the capital. So that's kind of our little piece in there. I'm sorry, Ken, I just have to tell Omar's story. It's so amazing.
That's truly amazing. Truly, truly amazing. And let's talk about, challenges in the next 15 years. And I'll kick it off real quick. My biggest challenge is the environment, the political environment we're in Florida. But after leaving de novo in June, we've now launched our digital solar program, and we're in 27 other states, and we expect to be in all 50 by the end of the year. And we're getting a lot of uptake in seems like all red states, which is really weird. But that's our biggest challenge, I think, and we're just plowing forward, keeping our head down, and trying to do the right thing. Andrea, what are y'all looking at Van City?
In terms of challenges, yeah, definitely, that net zero by 2040 goal that you mentioned, that's going to be challenging. For many of the same reasons you mentioned. A lot of it relies on big policy shifts that we have minimum control over, and so trying to put a bit more energy behind our government relations and advocacy work to address that. And at the end of the day, like Brian was mentioning, the impact, we're enabling impact, right? And that net zero goal relies on our members taking climate action. It's not really our goal. It's the goal of our members. And so there's a big learning curve there that we're on, trying to figure out where our members are at, where their starting point is, dialing it back to a certain degree and understanding that it starts with conversations, it starts with advice, it starts with education, and then it goes to lending. And it's a graduated process. So I think that's a big challenge. And then, a number of us talked about our work in developing metrics and trying to be accountable and transparent, and that's a huge challenge, especially in the climate space, when data is so hard to find around actual emissions data and how you track that and how we track our progress. So those are 3 big challenges out of many.
Yeah, I don't know
but
why
you got to keep
include...
moving. You got to keep moving, right? Like you got to keep trying. And I love the that quote, "Where does your money sleep at night?" I think that's a big collective challenge to create that awareness that the choices we make every day as consumers around our banking and our investing are so critical. and how do we get that tipping point? I think that's a collective challenge within the GABV that I hope we can try and address.
That's a huge challenge. It's amazing how little people really understand the power of finance. There's a fellow here in the States that is like really, he's got a nonprofit devoted to the study of the multiplier effect. And if I think I've got the stat right, that $4,000 deposited in a values-based bank as opposed to too big to fail or systemically significant is the equivalent of changing your entire diet from a regular diet to vegan. Just $4,000. So it's huge multiplier effects. So let's see, where did I leave off? It was me and Andrea Tara. What challenges do you guys see?
You know, I'll be short for the sake of time and say I think the biggest challenge we have can be summed up in choosing what to say no to. There is so much passion that is brought forth with the employees of our bank and our customers. And I think the hardest thing that we have to do day in and day out is really focus on our mission and key parts of our mission and really dive deep into it, which means that we have to say no to some things. And that is incredibly hard when we know there is so much work to do. But that's why we have cohorts and groups and collaboratives like GABV to be able to bring together and say, okay, you're working on this, great, tell me what you learned. But I think that continues to be an ongoing challenge, is staying focused on really where we can evolve and what we can do to change the outcomes that we're striving for.
That's brilliant. I mean, it's like that's my daily to-do list, but the reason it's like that is because I don't have a daily not to-do list. And that's what I need to start doing, is what not to do. Yeah, what to say no to. Jane.
Look, I very much echo. We have very similar challenges to what Andrea was saying in terms of just the, having bold targets and working to meet them. And, I think, as Tara mentioned, then working out which things to do and not is really important. The other thing I'd just call out from our perspective is just the question of scale. So, for customer-owned banks in Australia, it's an interesting time. We've seen a couple of larger, customer-owned banks merge over the last while, and Bank Australia is also exploring a merger with another really values-aligned customer-owned bank. And I think that's a huge piece of work to go down that path. But, when we look at what we could potentially achieve as a larger impact-focused organisation, I think that's a really exciting challenge that can really set us up well for the next sort of years ahead.
Yeah, scale. I neglected that one. Brian, what are you guys?
My goodness, ditto to everything that was said. But I want to go back a little bigger picture. I think the biggest challenge for our organization and organizations in general is recognizing that you're stepping into a gap, you're swimming upstream. You're actually solving problems that the traditional financial system and momentum will not solve. And that in and of itself is hard, right? And that's the biggest thing. And it's going to be harder. You need smart people, you need dedication, you need intention, you need resilience, you need all of these things to keep, what was the word? I say chipping away. I think Tara used a different version of these massive inequities or challenges that we have to deal with. So I'm with the not to-do list as well. That's a brilliant idea. Because there's, again, with these gaps, there's so many things that we want to try and solve for: climate justice, economic justice. The list goes on. What's our lane? How do we stay focused on it? How do we bear down on it? How do we fund it? Get to that too. What's your money doing overnight? How do you fund it? And then how do you move forward with intention on it? So thank you for the question, Ken.
Yeah, that's great. Sonia, do we have questions from the audience? We're at that time. How do you deal in communication when real triple P banks do real impact versus other banks? Okay, it just dropped. I didn't get it all. Dadgummit.
Is this a question about greenwashing? Because I will just say, like, you've got a bunch of B Corps and folks that are doing so much reporting. And so I think, you know, being able to find folks that do multiple dimensions of reporting and transparency, I think is so valuable. It really helps kind of cut through, I think, some of those headlines that can sometimes feel really bright and shiny and warm and fuzzy, but might not have the data behind it.
Yeah,
Yeah,
100%.
yeah, I agree. And I think data, using that term. So one of the things we look at is of all of our lending, what percent of it is dedicated to these activities? You'll get rid of the greenwashers. And there's, they may have a great marketing department and doing a couple things here and there, but is this what they do every day? And we've got to be clear. This is what we do every day, and we measure ourselves and hold ourselves accountable to it. And that's data driven.
Absolutely.
Can I just add to that? Because one of the things that I think, one of the values that the GABV has brought to the membership too is the scorecard and metrics like triple bottom line assets under administration, or I can't remember the exact term, but just that accountability, reinforcing Brian's comment around data and how we truly prove that what we're doing is the real deal.
Yes, absolutely. There's some great questions. They're just somewhat lengthy. I'm trying to distill it. There's a great question here from Philip, and the gist of it is there any work being done to standardize the credit policy changes or credit enhancements that are most impactful for lending to small businesses and or real estate developments, that are equitable access to capital? And that's a great question. And it would have to be country specific because of the different legal structures and legal requirements. But Brian, again, that might be something that we look at talking about.
Tara's going to be biting to, what is it, chomping at the bit to give some sort of answer on that one.
No, I was just saying, I was looking at you to say, like, I think that's part of our plotting with underwriting for racial justice is test, prove, and then scale. Like, I think, and standardize. Yeah, it's not going to help it's not going to raise enough boats if we just do it for our little cohort and our small portfolio. The goal is really to be able to prove a model. And then when folks say, oh, it can't be done, we have evidence to say, look, we did it.
Yeah, and then back, Tara, to the AI component and all that stuff for the alternate, credit determinants that we really need to nail for low to moderate income people because it's dramatically different. We've been seeing that on our underwriting on our consumer loan products. And I was looking through the list one day and it was declined and then way down, declined, declined. And I said, wait a minute, look at their surnames. They're all Latin. They're all obviously foreign, whether they're immigrants or, citizens or whatever. And we're declining them. And all of them had great credit scores, but they had super high DTI, debt to income ratios. And I was talking to one of our cohorts, and they said in their research, they found that that's because people, especially Latin American people, don't trust institutions. They don't trust banks, and don't generally bank with banks, but they've got great credit because they pay all their bills, but they don't show much income because they don't want the government to know how much income they're making, and they've got side hustles and they're doing a lot of cash income on side hustles. They're perfectly credit worthy, but under our traditional underwriting, you can't lend to them. And if we can establish, a firm foundation and alternate means, and then go to the regulators and say, wait a minute, we've got this forensic evidence that it absolutely works. So that sounds like yet another thing we need to work on nationwide, in the US anyway. Sonia, we're out of time, I believe. And I don't see any other questions.
I realize I just chatted this just to the panelists, but I'll say out loud for, the collective that you had mentioned distrust in financial institutions. And I think that that is often an earned distrust. And so part of our headwinds that I know many of us have talked about is earning that trust back and building institutions and organizations and standards that deserve the trust of communities that have been left out of our financial institutions. So yeah, just wanted to charge us all to figure out how to continue to earn that trust, because I know we are working at it every day here.
And Tara, I'm glad you read
100%.
that out loud. And I just want to just add one more thing with the AI and other discussion. If the systems and analysis are based on historical approval rates, historical data, you have built into the system challenges for how you expand it. And I think that has to be, it has to be broken and reassembled because some of those biases don't show up necessarily in the data. They show up in the results. And so I just want to call, as we think about this, we really are breaking systems and rebuilding them. We have to have that mindset, as the historical systems have their own flaws and problems.
We do, Brian, and we need to do it quicker than 15 years. Right? I mean, it's at the point where we need to change everything, and we need to change it fast. Or we won't have anything worth having for our grandkids, for those of us that have grandkids. I'm the only one, aren't I? You don't have one yet, do you, Brian?
I have a pseudo grandchild, not a real
Okay.
grandchild, but we Cheryl and I believe her to be our grandchild.
All right. Well, thank you everyone for attending. Thank you very much. Thank you, panelists, and let's do it.